Emerging markets account for almost 10% of the world's market capitalization. Despite this, Canadians have a very small allocation to these markets, and we at Sphere Investment Management believe this should change. Investing in emerging markets exposes you to some very strong and favorable growth trends. Emerging markets have accounted for over half of the GDP growth of the world over the last decade. And this growth is expected to continue in the future as emerging markets are projected to grow at 4 to 6% versus the developed economies that are expected to grow at 1 to 2% for the coming years. Favorable demographics is another reason why investing in emerging markets makes sense. The working age population of emerging markets is well over 60%, which is a huge driver of GDP growth. Having underperformed for the better part of the last 5 years, emerging markets also offer a very compelling valuation. Despite the fact that their economies are supposed to grow at higher rates in the coming years, they are at a significant valuation discount to the developed markets. Portfolio diversification is another reason why investing in emerging markets makes sense. The low correlation that they have with developed markets actually lowers the overall risk of a portfolio that has an exposure to emerging markets. One last reason why investing in emerging markets makes sense is that the overall volatility is much less than you would expect. In a Canadian context, volatility of emerging markets is actually quite low. Given the correlation that the Canadian dollar has and the Canadian economy has to emerging markets, you can actually capture higher returns and higher levels of growth with lower volatility than you would expect.